Hi, everyone. Welcome to this evening's webinar, Relocating to Spain, Visa and Financial Insights for U.S. Citizens. I am William Furio, and I am the Events and Communications Manager at the Spain-U.S. Chamber of Commerce. It is my pleasure to introduce our webinar leaders tonight. Anna Klevtsova, she is the Managing Partner of Klev and Vera International Law Firm, and Tom Zachystal, co-founder and Chief Investment Manager at EuroAmerican Financial Advisors. If you have any questions or comments, please feel free to drop them in the chat. And during Q&A, I will ask your questions to Anna and Tom in order of receipt. Thanks again, all for joining us. And then Anna, you can take it away.
Sure. Good evening, everyone. Happy to be here in spite of just a slight time difference. Today, we will talk about the main visa options in Spain for the US citizens. And, my biggest challenge while I was preparing this chat, in fact, was trying to cover all the immigration options and visas available in just 20 minutes. We are not going to do it as it is not possible, and we will just focus on the main options that we usually recommend to our US clients. So you see in the slide the main immigration ways in Spain. There are basically three acts. The first one applies to the European citizens and their family members. The second one is the International Mobility Act that will cover main of the permits that we will be actually discussing today. And the General Immigration Act applies to all the others that are not covered by the first two. So in the next slide, we will see, next one, please. Yeah, we see the main visa options that we usually recommend to our clients and we will talk about today. So if we move to the next slide, that is actually, my favorite visa so far. But when I was preparing that presentation, I was preparing it and now, unfortunately, there happened some changes as just of this evening, basically a few hours ago. The Spanish Congress eventually approved the bill that is going to eliminate the golden visa. So I'm not quite sure if it still makes sense to go into much details into this option. But so far, it is still valid as the bill will still have to go to the Senate and be published, etc. So there will be still a room for the application, but it is going to be really short. So we will kind of jump through it very quickly. In the next slide, you see the assets that qualify for the golden visa. And the most popular by far was the real estate investment. And then there is a possibility also to invest in financial assets or in business. But now, if you don't have the investment done already, it's going to be probably hard to complete an investment in real estate or in company shares. But the financial assets are still possible, until the Senate announced the approval of the bill. And if you are thinking about that, then this is something that you could still consider. In the next slide, you see the main benefits of the visa, and basically the main advantage is that it is the only permit that can be renewed even if you actually don't live in Spain, because all the others, they require you to spend at least 183 days per year. But this one was the one that allows you not to live in Spain and therefore not to convert into a tax resident. We will probably jump the next slide about the application and just go quickly to this one because we will get back to it in the next options. And here you see the map of the Spanish consulates in the US and which one of them covers each state. It's important to mention that you can only apply in the consulate that corresponds to your official address in Spain, in the US. That means the one that is registered either in your driver's license or voter's card. In the next slide, I prepared the quick update about the status of the golden visa, but we already talked about it, so we can skip it. Just quickly passing through the next one to see how many golden visas were actually approved in Spain. And you see that the amount is not very high, the number is not very high, but still it is a very popular option for American investors. The next option is the digital nomad visa, and it's the one that is actually now one of the most popular tools to move to Spain. And you can consider it if you are an employee in an American company, or if you are a freelancer or have your own business and can work exclusively remotely. In the next slide, we see this one, like the benefits of the visa, and basically it gives you the flexibility to continue having the salary in the US while enjoying the lifestyle in Spain at a slightly lower cost of living in the US than in the US. The next slide talks about the main requirement for this visa, which is the social security coverage. If you work on a US payroll, then the US Social Security treaty with Spain unfortunately does not cover the remote work. So the only option for you to relocate is if that your employer registers a work center in Spain. And that means paying social security quotes on your salary in Spain, which usually in practice doesn't happen frequently because it means an extra cost of about 30% for companies. However, if you are an independent contractor, it is generally easier to execute because you will need to register in Spain as a freelancer. You pay your taxes and social security quotes in Spain, but this covers you completely for your health care, gives you access to pensions, etc. In the next slide, we see the application process. There are two possibilities. You can, if you are in the US, you can go directly to one of those consulates of Spain that corresponds to your address and apply for a residence visa, which will be issued for 1 year. Or if you are in Spain, you can directly apply for a residence permit, and this application can be filed online, and it will be given for 3 years. We usually recommend to choose this option as it gives you a longer residency, and it gives you the chance to avoid going to the consulate in person several times and waste your time on that. Now moving to the next popular option, non-lucrative visa. It is for those who have enough passive income or significant savings and in general is financially stable and doesn't need to work either in Spain or in the US. It's like basically for those who are already retired or who can who feel like spending some time or just living without working. So you need to show that you have sufficient funds and that you have a private health insurance that covers you for all risks in Spain. In the next slide, the benefits of the golden visa. Initially, you can request the residency for 1 year. So you have that chance to have a look at Spain, decide whether you like it or not. And if you want to continue, you can apply for the renewal for 2 years periods without leaving. And it covers also the family members. Now we will move to the section that deals, the application process, sorry. This is a permit that is ruled by the general immigration law, and it is only possible to file the application through the consulate in the US. It is not possible to request it from Spain. And as a general immigration law permit, it is much slower to receive. So you can wait for the approval for around 3 months or sometimes even longer. But generally in the US, it's about that. It's about 2 months. Now moving to the next section, which will cover the work permits in Spain. So the first one is a highly qualified professional visa, and you can request it if you receive a job offer directly from a Spanish company to enter on a payroll in a Spanish company. So the main requirements to that are that you are actually a highly qualified professional. That means have some certain level of responsibility. So it's either experts or managers or researchers, like technicians, but some sort of high responsibility. No? And the salary should not be less than 40,000 euros per year. The next one. Next slide, the benefits of the visa. And the main advantage is actually the one that if you get it, you can qualify for a reduced taxation in Spain. That's typically called Beckham law. That means you can be taxed on a fixed rate of 24%. And you can come with your family. It's valid for 3 years. You can renew it. And it's actually one of the fastest procedures to get approved, because Spain promotes the relocation of international talent to Spain. In the next slide, the application process. It is slightly different, and it starts by your employer filing a request to the immigration office to get the approval. It has to be done in Spain. It can be done online, and the response is generally coming very fast. No? So if you were in Spain when the employer filed the application, you can directly start working. And if you were outside, if you were in the US, you will have to pass through one of the consulates in the US to request an entry visa. The next slide, the next permit is similar to this, but it's an intra-company transfer that basically refers to temporary relocation. So it is for those who are on the payroll in the US company, and your company wants to relocate you to Spain on a temporary basis. So basically, if they have a branch in Spain, or if they have a client in Spain that they need to assist in some sort of assignment or project, so they relocate you to be in Spain temporarily. In the next slide, we see the main benefits. As the previous one, it also qualifies you for a reduced tax rate. And the Social Security Treaty between Spain and the US does cover this type of relocation. So if you request a Social Security certificate, you will actually be covered for all the risks and keep your employment as you had it in the US, and nothing will change for your employer, which is a significant advantage for this type of short assignments. The application process on the next slide is similar to the previous one. Your Spanish branch or your Spanish client will need to file a request for the work permit authorization online in Spain. It gets approved within 20 working days. And then if you were in Spain, you can start working. And if you were in the US, you will have to pass to the consulate to get an entry visa. Now we will move to the section of self-employed visas. There are two types. No, the first one is the so-called startup visa, which was introduced recently, and it stimulates the attraction of foreign entrepreneurs to Spain that have some sort of innovative business that has a potential to be scaled up. So this definition that Spain has of a startup needs to be approved. So you will need to file the business plan on your project to a special agency that's called ENISA. And if you get an approval, then you will receive the startup status. and you can qualify for this permit. In the next slide, we see the benefits of a startup visa. So this one also qualifies you for the reduced taxation of the Beckham law. And in addition, it gives you certain tax benefits on your corporate income. So you can see that you can get a reduced tax rate for the first years. Then you can renew it, etc. The application process on the next slide starts by filing your business plan to that ENISA agency. You have to file it online, and when you get approval, then you file for your residence authorization, also online in the immigration office in Spain. And then, similar to the previous one, if you were in Spain at the moment of filing, you start working, and if not, you need to get an entry visa in the consulate in the US. In the next one, the regular self-employed visa that applies to any other business project that does not fit into that definition of a startup in Spain. So basically, any business, whether it is a consultancy, I don't know, marketing agency, restaurant, or anything else that is not a startup, can qualify for a self-employed visa if you prepare the business plan and get a viability approval from one of the authorized agencies as well, but in the regions. This permit is issued under the general immigration law, and in the next slide, we see the benefits of this visa. And basically, the main advantage is that, well, the initial visa is for 1 year, but then it's renewed directly for 4 years. So in total, you will have 5 years, which can qualify you for the permanent residency. But very important to note that your family members cannot join with you straight away when you first apply for it. They can only join with you after the first year when you actually got the renewal of the permit. And this one, as it is an employment, it will give you access to the public health care, etc. The application process on the next slide, slightly different as a general immigration law permit. You will have to file the application obligatory through the Spanish consulate in the US. And it is going to be a slow process because it can take somewhere around 3 months and sometimes also slower because of the ways that the general immigration law works. And you cannot apply from Spain. And now finally, the last 2 permits that are also quite widely used by the US citizens is the student visa and the internship visa. If you want to do some sort of studies in Spain, it can be a university degree, it can be language course, anything that you want to study, it qualifies you for a student visa. Or if you recently graduated, or if you are still studying in the US and you want to gain some professional experience here, then you can request an internship visa. In the next slide, yes, the benefits of this visa, that it's relatively fast to get. It covers you for the duration of your studies. And if your studies is in the university or in some sort of professional school, you will also receive an automatic authorization to work part-time up to 20 hours per week. And your family members can travel with you if you apply for the visa through the consulate. So now finally, the application process, it is possible to request it from the US through the consulate, or you can travel to Spain as a tourist and apply for the student visa online here, but only if you have at least 30 days left of your current studies. And that's all for me. For now, I will be happy to answer any questions that you have in the Q&A.
Well, I guess it's my turn now. So just a brief introduction. Thanks for that, Anna. Very informative. So my name is Tom Zachystal, and We have actually two firms. So what you're looking at is our Spanish firm that we started a few years ago. It's an investment advisory firm and financial planning based out of Sevilla, Spain, and it holds our European license. I've also had a US firm, US registered investment advisor for over 20 years, called International Asset Management, that caters to Americans living abroad. That firm has clients in about 35 countries. And like I say, we've been at it for over 20 years. So my colleague Shane Clark actually runs the Spanish firm out of Sevilla, and we provide financial planning and investment advisory services through that firm. So let's move into the presentation. Here's just kind of a quick checklist on things that you might think about depending on where you are in terms of your transition from the US to Spain, right? Issues related to moving, following the move, ongoing issues. We don't deal with all of these things at our firm in-house, but we have what used to be called a Rolodex of complementary advisors that deliver some of these services, like, for example, Anna's firm, visas and tax planning, and then we have other firms that do various other services. But on our side, what we can help with mostly are the US brokerage account issues, portfolio considerations. We can't teach you Spanish, sorry about that. And then, following the move, ongoing financial planning, it can be quite different. Also before the move, some financial planning. It's a good idea to get in touch before you move, because there are some issues that you can't undo later. And then as things go on, retirement planning and inheritance, there's a difference between inheritance and estate taxes that we're used to in the US, for example. So these are the kind of issues and the various stages where you might want to consider this. So let's move on to the next slide. And what's different about Americans living abroad in general, obviously, is that citizenship-based taxation, right? If you're a US citizen, you can never escape the IRS. We're only one of two countries in the world that has citizenship-based taxation. The other one is Eritrea, which is this little country near Somalia. And the reason they have it is because they have more citizens living abroad than they do in their own country. So it's kind of useful for them. So we're kind of unique as Americans, that we have to file tax forms typically in the US and in our country of residency. And that leads to a number of issues, obviously filing the US tax returns. But there are also certain regulations around this. FATCA, which is a tax information sharing agreement between many countries, Spain included. And what it means is basically that US institutions, banks, and brokerage firms have an obligation to report to the Spanish tax authority if you're a Spanish resident, and vice versa. If you open an account in Spain or elsewhere in Europe, they're supposed to ask you if you have any relationship to the US, and if so, they might have to do this FATCA reporting to the IRS on your Spanish bank account. So that makes it easier, that makes it harder to find companies to deal with, and we'll talk about that a little bit later. There's FBAR reporting as well, which is related to how much money you have in non-US bank accounts. And then there are some regulatory issues that come up, which are the other three things here: PFICs, MiFID, PRIPS. So PFICs are basically a regulation related, stands for passive foreign investment corps, for our purposes, it's sort of a regulation that affects mutual fund investments. So if you hold, for example, non-US mutual funds as a US taxpayer, then you'll have to do this PFIC reporting. It's not very pleasant and not very good from a tax perspective either, and quite expensive. So you want to avoid non-US mutual funds because of these PFIC issues. And MiFID is the regulation that governs investment markets in Europe. It's important, for example, to deal with a MiFID recognized regulated firm that understands European regulations and so on. And PRIPS is a regulation that affects the type of things you might be able to invest in, specifically US exchange traded funds might be difficult to invest in from Europe. So we'll touch on these a bit later on. So let's move on now. So top financial planning issues for, I think we missed a slide actually. There we go. So we'll just we're just going to go through these four topics: financial planning issues. These are sort of the top financial issues that we see when people are moving or living abroad in general. Financial planning, management of financial accounts. It isn't as straightforward as it is in the U.S. Certainly tax issues. We don't offer tax advice, but we do understand the regulations as they relate to investments and other things from a financial planning perspective. And then investment considerations, some limitations on things you can invest in and how you manage investments. So let's move on to the next slide. So let's talk about financial planning first. So first of all, what is financial planning? There's sort of two parts to a financial plan. There's the number side and the non-number side. So the number side, it's like a personal income statement, cash flow, balance sheet, projected into the future and incorporating your financial goals. So a lot of people use it for retirement planning, for example, or in the US, if you have kids and you're sending them to college in the US, university, that can be quite expensive. So it can be used for that. It can be used to look at scenarios like buying versus renting a house, that kind of a thing. So that's the numbers side of it. There's also sort of a non-number side to it, which is things like, for example, on the taxation side, or talking about things like risk management, insurance, advice around whether you should have a private insurance or you have a national health here available in Spain and many other places as well. So that's kind of the non-number side. For us, it's more having to do with cross-border issues, and we'll talk about some of these in greater depth a bit later on. A financial plan can also help inform your investment plan, because typically in the US and many places, there's a questionnaire you do at the beginning of a relationship with a financial advisory firm. It's what we call a risk profile questionnaire, and it kind of gives us an idea of how the investments how much risk you might want to take in the portfolio. Maybe a very aggressive portfolio might be all stock market, and a very defensive one might be just 20 or 30% in the stock market. So it helps with that kind of profiling. But what a financial plan does is it looks at it from the other perspective. It looks at it from the perspective of what rate of return might you need on your investments to realize your financial goals. So for example, how much do you need to save for retirement? And we do that from a budgeting perspective. So that's how the financial plan can help. And it might show, for example, that if you need a very low rate of return on your investments because you have sufficient funds for your needs, or maybe you have guaranteed pensions or Social Security, they'll meet your needs, then you might be able to have a more conservative investment profile than even your risk profile would suggest. So financial plan can also help inform the investment plan. And then there are specific issues that we might look at. And this is kind of the soft side that I was talking about of financial planning. So in Spain, some of the things that come up is a lot of people, for example, when they're leaving the US, well, they have a property to sell in the States. And in the US, there's a capital gains tax exemption available for that. But it doesn't work that way in Spain. And so typically you might want to sell that property before you become a Spanish tax resident, because you can use the capital gains tax exemption and you don't have to worry about what the taxes will be in Spain yet. So that's one issue that comes up. There's a wealth tax in Spain, which we're not used to in the US. That's a tax on assets that you might potentially have to deal with. Opening a bank account, that's one of the first things you'll want to do. But typically you might need what they call a national insurance number to do that. But there are certain places, Banco Sabadell, when you can do it without an NEI. So things like that are things we also can advise on, and things you need to look at probably before you leave the United States. So let's move on to the next slide. So then there's just talking about financial accounts then. And generally here we're talking about bank and brokerage accounts, right? So brokerage side, you might have an individual or a joint account, and you might have some retirement accounts. You might have a 401k plan that you might want to roll over or keep as a 401k plan. And there might be some specialty accounts as well. So in general, for US taxpayers, so US citizens living abroad, it's best to keep investment accounts in the US because you get the 1099 forms for one thing. You get the US tax reporting that you need, but also there are other reasons. So the US is a pretty competitive financial marketplace. So generally the fees are lower. Outside the US, and especially in Europe, things are still very much mutual fund based. It's a little bit like the US was back in the 80s and 90s. You had mutual funds with front end loads and 3% charges and so on. And now in the US, we've gone to more exchange traded funds, lower cost products, that kind of a thing. So generally you have lower fees also in the US. You also have greater investor protection. We have $500,000 SIPC protection on investment accounts in the US. That isn't the case in Europe. I think I'm not quite sure what it is in Spain. I think it's like 60,000 euros. I know in Ireland it's 20,000 euros. So that's also potentially a big deal. And just the variety of investment products. The US is the largest marketplace in the world. You have access to a variety of investment products from around the world, not just American ones, right? So better to keep the brokerage accounts in the US. The retirement accounts, you can't move them anyway. They have to be US accounts. And then the question is, who do you deal with? And we'll get to that in a bit here. Bank accounts, you want to have a local bank account, of course. And then you have to think about FBAR and FATCA reporting. So if you have over $10,000 in total in your non-US bank accounts, you have to file this FBAR form. And then there's potentially also a FATCA form, depending on the level of assets you have and the type of assets you hold. So those are the kind of considerations you want to think about in bank accounts. And also not everyone is going to want to deal with you, frankly, as a US citizen, because they have to do this FATCA reporting themselves, the banks, back to the IRS. So you may not be able to open an account just anywhere. So you should be aware of that too. In terms of currency exchanges, there's a couple of ways to go. A lot of people exchanging through the banks is usually a bad idea. They'll tell you they don't charge fees, but that's because they give you a lousy exchange rate. So it's usually better to use something like a currency exchange and transfer company like Wise or MoneyCorp, or OFX is another one. And they will exchange funds for you and convert currencies and wire it wherever you want. It's pretty easy once it's set up. And also Wise, at least, has become more of a bank. They even pay a decent rate of interest, and you can have multi-currency accounts, and so that might be an option for you if you want to keep a US bank account as well. Another option is SDFCU, State Department Federal Credit Union. If you want to keep a US bank account, they are the credit union that deals with people who work in the US consulates and embassies around the world, and anyone can open an account there. And they offer traditional banking products like any other credit union, CDs even, that kind of stuff. Two-factor authentication issues are sometimes a problem if you don't have a US phone number anymore. So you should look into, if you're going to keep your bank account or some other account, how that's going to work once you're overseas, and especially if you don't have a US phone number anymore. There are some ways, for example, to park your US number now. There was a, I don't recall, but if someone wants to hear more about that, they can send me an email. But there's a company where you can basically park your US number for, I think, $4 a year or some low fee, and keep that number and still receive text on it that are sent to your number overseas. So let's move on to the next slide. And then there are tax issues, right? So you can never escape the IRS as a US citizen. And what's key about this is to find a tax person who understands the tax treaty, because that's the key to the whole thing. If you're a Spanish resident or if you're a European resident already, because the tax treaty is what governs how the two tax regimes work together, and it's what keeps you from getting double taxed, basically. So there's a tax treaty with Spain and the US. And so usually it's best to find a tax advisor in Spain who also does or understands at least US taxation. Some people, they move overseas, they keep their tax advisor, they find another one in Spain who does Spanish taxes. Nobody understands the tax treaty, and it's kind of important to understand that tax treaty. In terms of the investment portfolio, tax issues related to that, the big one is avoiding PFIC taxation, which it would be taxation on non-US funds. So for example, non-US mutual funds or exchange traded funds in some cases. So you want to avoid those in taxable accounts. If you manage to open a brokerage account abroad or something like that, you want to make sure you don't have these PFICs in there. And then capital gains taxation works differently as well. There's no concept of long-term or short-term capital gains in Spain, so just be aware that is taxed differently as well. Then there are retirement accounts, and there's kind of a gray area, mostly around Roth accounts. And this is a gray area in many tax treaties. So generally speaking, a traditional IRA 401k plan is recognized as a pension plan under the tax treaty. It more or less gets the same treatment in Spain as the US for expats, but not necessarily for a Roth, because that's a bit of a different animal. I don't know if there's really good guidance. We've asked a lot of people about this, and it's a gray area. It's a gray area in Portugal. It's a gray area in a lot of places. So just be aware that your Roth account may not work the way you thought it was going to work in the U.S. For taxation elsewhere. And then there's a difference between inheritance and estate tax. We have an estate tax in the U.S. You know, it's 13 million estate tax exemption for U.S. citizens, 13 million plus right now. Other places have an inheritance tax, which is a tax levied on the person the beneficiary, who gets the money in the end. In fact, that's probably the most common tax regime. An estate tax is levied on really the person that dies, the estate. So just be aware of those differences as well and how they work. And there can be nuances related to that and some complications in the case of a death. So let's move on to the next slide. So then investment considerations. So we talked about this FATCA reporting and what that has led to over the last 10 years, and I've been doing this for about 25 years now, dealing with expats, but say over the last 10 years or whenever FATCA started, we just saw basically a lot of the US brokerage firms and some of the banks, but most of the brokerage firms have just not wanted to deal with people overseas. I mean, sure, if you have like a 10 million, $20 million account, they'll figure it out. But even like a few $1 million, they may not want to deal with you when you live overseas. Part of the reason is this FATCA reporting. Another reason is what we call know your client rules. They can be different in other countries, and so a lot of the brokerage firms in the US will just not want to deal with you, or maybe they'll just freeze your account in the sense that you can sell but not buy once you move overseas, once you move to Spain. So we use as custodian for our clients. In other words, we don't hold our clients' money. They're held at an independent firm. And we use Charles Schwab and Interactive Brokers. Both will deal with people living in Spain. Schwab is a bit more user-friendly. Interactive Brokers offers international accounts, multi-currency accounts. So just depends on what you want. So those are two good custodians for people living in Spain. And then the question is, do you want a managed account or self-managed? If it's self-managed, you may run into issues with Charles Schwab, for example. You will not have access to U.S. exchange-traded funds if you're managing it yourself from Spain. But if you're using a U.S. advisor, that's fine. We do have access to U.S. exchange-traded funds on behalf of our clients. So you run into nuances like that. With Interactive Brokers, you also in an individual or a joint account that would be through Interactive Brokers in Ireland, actually, if you set it up from Spain, and you won't have access to US ETFs either in that account, although you might have access in say a retirement account. So you have to decide whether you use investment advice or self-managed it, and there are nuances to that kind of a thing that you need to be aware of. Regulatory limitation on mutual funds and ETFs. Well, you won't have access to US mutual funds if you're living in Europe. With Interactive Brokers, they won't even transfer over. If you're transferring into an Interactive Brokers account that's been set up with a Spanish address, you won't even be able to transfer the mutual funds from another institution. With Schwab, you can transfer them, but then they'll be frozen. You can sell them and not buy them. So pretty much using U.S. mutual funds is kind of out for people living in Spain. And like I said, there can be some limitations on ETFs as well, especially in self-managed accounts. 401k rollovers, the issue there is you can do a rollover from anywhere in the world, typically, if you're using the right custodian, and they'll accept it. But what you run into sometimes is that they'll want to send a check. And whatever institution is holding the 401k, once you roll it over to another institution, Schwab or brokers, say you're doing it from Fidelity or someplace like that, they may want to send a check. And they may want to send a check to the address on record, which could still be your US address. So you could run into that problem. Sometimes you can do it electronically. They'll do a wire, but very few. Most of the time it's a check. If you're lucky, they'll send a check directly to the custodian. Then the check is made out to Schwab or Interactive Brokers and it goes directly to them. That's fine. But there are some companies like I believe TIAA CREF, for example, that insist on sending it to the address on record. And then you have to figure out how you're going to manage that if you're no longer at that address. So all in all, it's probably better to do the rollovers while you still have a US address if you can do that. And then there are some nuances around specialty accounts like HSAs, annuities, long-term care insurance. I'm not going to spend a lot of time on that because it's kind of a case-by-case basis. But for example, if you have an HSA account, you don't want to cash it out because there'd be a tax penalty. Then you can keep it. You can even use it, although you'll probably be covered by national health in Spain eventually. But you can still use it for certain things. The other thing is you can invest it. For example, if you put it with a company called Optum, then they have what's called a brokerage window, a Schwab brokerage window, where it can be invested just like any other Schwab account can. Annuities, there the issue is where the check's going to be sent, where's the money going to go. A lot of annuity companies won't send it overseas, or if you're getting checks, where are they going, that kind of a thing. And then LTC insurance, if you have that, American, not all policies, in fact, very few policies will cover you overseas. Some of them will, but they might be limitations on what you're used to. Like if you have a 4-year LTC policy, it might only be for 2 years if you're overseas, that kind of a thing. So that's another thing to be aware of. Next slide, please. Yeah, so we're kind of getting to the end of my presentation here, but just a quick, some of the questions you should ask on the investment management side. It's important to be dealing with somebody who's licensed and experienced in the EU. It's an EU-wide license in Spain as well as the US. I mean, you can deal with an American firm if you're in Europe. There's no limitation or law against that, but they are not. But unless a U.S. firm is also licensed in Europe, and very, very few are, there's probably 3 or 4, including us, that I can think of. They will never be able to meet with you on European soil, for one thing, because they just are not allowed to give investment advice on European soil unless they're licensed there. That's the limitation. And, the other thing to think about is one of these days, they may pass a law in Europe that says, hey, if you live in Europe, you have to deal with an EU licensed firm. And then what are you going to do? Because they've already done that in places like Canada and Singapore, for example. So, that's something to think about. And also, what's the backup plan? Do they have a backup plan? What if they're dealing with Charles Schwab, but they're not dealing with Interactive Brokers, and Schwab changes their policy on people living in Spain, and they don't want to deal with people in Spain? They did that in Italy and the Philippines a couple of years ago. So there should be a backup plan. Our backup plan is that we deal with 2 custodians that will deal with people living in Spain. And then the usual thing about, what's your background, licenses? Do you have a European financial planning license that might be helpful in dealing with issues there and that kind of thing? So just some things to look for. And next slide. And that's it. That's our contact info. If you have any other questions, feel free to look us up. And thanks for your attention. And I think we're going to get to the Q&A now.
Hi, everybody. I'm back. Thank you, Anna, so much, and Tom, for those wonderful presentations. So informative and so appreciated. Anna, first question is addressed to you. It is, I am married to a Spanish citizen, and we are preparing to return to live in Madrid. Can you speak a bit about the Tarjeta Residencia Familiar, the family reunification card? She is now a dual citizen since 2017, and we are planning probably a permanent relocation.
Sure. Yes, in fact, I see a few similar questions in the Q&A that refer to EU family members permit. So yes, indeed, it was actually, the group of residency permits that are regulated by that special law that applies only to the EU citizens and their family members. And basically, if you are a family member, like in that case, a spouse of either a Spanish citizen or a European citizen, my first question to you would be whether you registered your marriage in Spain. So you could have married in the US or in Spain. If you got married in Spain, then the marriage is automatically registered. But if you got married in the US, unless you went through the Spanish consulate in the place, that corresponding consulate to your official residency, to register the marriage in the civil registry of Spain. Because if you haven't done that, Spain will not recognize that marriage, as there is an obligation on the Spanish citizens to register their marriage first. So that is something to check first. If your marriage is registered, it is fine, and you can directly move to Spain as a family member. So in that case, depending on what your spouse is going to do in Spain, there is a series of documents that you will need to provide. But in general, it is very simple. You travel to Spain and you apply for residency online from here. If your spouse is working on a payroll in Spain, you will show the job contract. If he or she is registered as a freelancer, then the registration. And if not, you can just show that you have enough funds, and we are talking about very small amounts, something like 15,000 euros in your bank, and the private health insurance. And you will get your residency as a family member directly for 5 years. But it is very important to make sure that your marriage is registered. If your spouse, that is jumping a little bit to the question that is below there, that the spouse is German, it is also the question to check whether the national law of Germany requires, or Germany or any other country, European country where your spouse comes from. So if Germany requires the marriage to be registered in the civil registry, then that's the first step to do. And after that, you can relocate. So in that case, if your spouse is not Spanish, but coming from the European Union, there will be some formality that the community citizen will do. That is apply for the registration as a European citizen in Spain. That's basically also to show whether they have sufficient funds, private health insurance, or a job contract in Spain. And after the spouse is registered, then you can apply as a family member in the same way.
Excellent. Thank you, Anna, so much. And then just to kind of group these questions together, Carlos G writes, similar question to Alan with a twist. Can the US citizen relocate to Spain with the Spanish spouse staying in the US a bit longer? Solid share assets in Spain, including apartment in Madrid.
Yeah, so in that case, we would need to analyze a little bit better the situation. So there could be several options. If you want to apply for the EU citizens family member, it only ties to the family member, to the Europeans, the Spanish citizen in that case, being a resident in Spain. So if the Spanish citizen does not come yet, it is not possible to apply for the EU family member. The Spanish spouse will have to be registered in the address registration on the census in Spain, and then the family member applies to join with them. So in that case, if you want to relocate before your spouse, we could consider perhaps fitting you into one of the individual visas not related to the family members, but just as as an American citizen, probably a digital nomad or a non-native resident. Or your Spanish spouse will have to travel to Spain, register, you would have to be registered in the same address in the census, in the town hall. Then you can apply for your residency, and then your spouse could be traveling a little bit back and forth. But depends on how much time we are talking about, because it is fine for a few months, but if we are talking about a longer period, then it would probably not be correct.
Great. And I think
and sorry, and as that person mentioned, significant assets in Spain, perhaps it is also the question to make whether you could still qualify for a golden visa. Because if you own an apartment in Spain or real estate in general, that's in the total purchase price makes up to 5,000, then you can qualify directly for a golden visa. Still, well, during that period until they actually approve the cancellation.
Excellent. Thank you, Anna. We've got time for about 3 more questions. I want to get to Diane Metz's question. She asked, if one has 401k in the US, what do you have to report to the Spanish government if you are a resident of Spain?
Well, a 401k is considered a pension plan under the tax treaty, similar to a traditional IRA would be. So, it'd be kind of equivalent reporting. If you make distributions from it, it's taxable income to you. If you're in the U.S., it would be taxable income to you if you're in Spain. Generally speaking, the way it works is you put the income on both sets of tax forms, and then you take a credit for the tax paid in one country against the tax paid in the other. If you're a Spanish resident, probably you end up paying tax in Spain on that. So the reporting obligations are similar. There's some question as to whether you have to report it on a 720 form. I understand is a little bit above my pay grade when it comes to Spanish taxation, frankly, but 720 form is like a foreign assets form on the Spanish side, and pension plans generally aren't reported on there, I think, but then it's not an EU pension plan, so there's some question about whether it should be reported. So that's another thing to think about, whether it does need to be reported on that form. But generally speaking, the tax reporting would be very similar to the US, except that you have this cross-border netting of the income, let's say.
Great. Thank you, Tom. Curtis Altman writes, if we have 375,000 real estate already in Spain, can we still qualify for a golden visa in the future with another 125K real estate investment?
Yes, you do, with the inconvenience of very tight timeline that you will need to purchase that remaining, property. You would really need to hurry up because you can, join together various properties to make up 500,000. But if we are talking that it is possible and likely that they will approve eventually the termination of the golden visa before the year's end, that literally means that you have something like 5 weeks to buy an apartment and apartment or any other real estate property. So it has to be registered in your name. And you need to also to prepare all the necessary documents for the application as soon as possible. It is possible, and we actually have many clients who are doing that in this next few weeks, but it's very challenging and you have to start immediately.
Got it. Thank you, Anna. What Xavier A. Madrid writes, what are the requirements and benefits of the Beckham Law for U.S. citizens moving to Spain?
Tom, would you like to take that, or do you want me to answer?
Yeah, you can answer that one.
Yeah. I must say, first of all, I'm not a tax lawyer. I'm deal with immigration, investment advice, etc. But I know the basics. So the Beckham Law gives you the right to be taxed on the fixed rate of 24%. And only on your employment income that you receive. So if you relocate to Spain on, let's say, a work permit to be on the payroll in Spain, that means you will pay tax on your employment income, and all your foreign assets will be excluded. There are some additional requirements, of what kind of income is compatible when you are on the payroll in a Spanish company. It is probably not possible to tax as a freelancer abroad, but definitely any passive income like interest, rental, etc., that you receive abroad, and specifically the wealth tax, the assets that you own, but not necessarily, giving you a profit, that would be excluded to be taxed in Spain. But that is something that, depending on your situation, it's always good to check with the tax attorney And as Tom mentioned, it's, ideally that someone who understands the double taxation treaty and the situation in both countries, in Spain and in the US.
Awesome. Thank you, Anna, so much. And then the final question is for Tom. So, Tom, do you believe it's more beneficial to move as Europeans to Spain, having both our passive and active incomes in the US, or to apply for one of those visas as US citizens, which we also are? All our income, passive and active, is in Spain, we only have a house and 2 cars. Our marriage is registered in the US only, and we work remotely.
Wow. So moving as I'm just trying to find that question actually.
It's at the very end, Tom.
Yeah.
I think it may be actually be addressed to me because I send some immigration questions here as well. No, so I
Okay.
think what the person what Areni, sorry for mispronounce, means that if it's possible to choose what type of visa apply. If you are a family member of the European, can you move on your European passport, or can you choose to move as a non-lucrative resident, for example? No, but here in fact, like the matter, the main concern here is what is a tax residency. So in Spain, it doesn't matter what type of residency you have, what kind of permit, no? But how much time you spend in Spain, So it's a question of tax residency that is regulated under the double taxation treaty. And in the double taxation treaty between Spain and the US, it says that if you are living in Spain for more than 183 days per tax year, you become a tax resident in Spain. And therefore, you will be taxed on your worldwide income and wealth unless you qualify for the Beckham law tax. And this means that because you are also a citizen in the US, you will be paying the tax in the US and in Spain, and applying the exemptions that exist under the double taxation treaty to avoid being taxed twice on the same type of income.
You recommend a double taxation lawyer who understands Spain and US taxation.
Oh, I certainly can. My colleague in our own firm works with the double taxation treaty every day, and we work with many clients from Tom and his company. And yes, we will be happy to assist in this.
Yeah, we'll put a plug in for Sergey, right? So
yes, exactly.
Sergey's Anna's colleague, and he's done good work for a lot of our clients, and also on the wealth tax. If you need a wealth tax analysis, I'd highly recommend him.
And Beckham law application in particular.
Fantastic. And Anna and Tom, just going to finish with one last question, which I think kind of surmises who can I talk to about my specific case regarding all these issues?
Oh, well, you can talk to Anna about the immigration issues and Sergey about the tax issues, and you can talk to us about everything else. We may not be able to help with anything else, but we have a lot of people we can refer you to. Certainly on the investment management and financial planning side, we'll be able to help you with those issues internally.
Excellent.
Yeah, and in fact, actually, with the colleague of Tom, who is based in Spain, Shane, we sometimes offer joint consultation with Shane on the financial planning side, myself on the immigration strategies, and my colleague Sergi Garces on the taxation. So, the way that we like dealing with the cases is to have that global understanding of the full impact of your relocation. Not just what immigration permits is better for you or is quicker, but how that type of residency can fit into your tax expectations and obligations, and also how can affect your finances back in the US, and how to best move them to Spain or keep them in the US to make sure you avoid all that complications that Tom mentioned in the past.
Great. Anna and Tom, thank you so much for tonight. It was excellent. Thank you so much for this just wonderful Q&A as well. Um, and I want to say thank you to everyone who joined us. We're going to be posting this on YouTube so you can rewatch and share with anybody who might need this information as well. And I hope everybody has a great night. And we'll see you soon. Thank you so much.